Much has happened since Bitcoin's birth in 2009. Bitcoin has gone from being a completely unknown digital toy with no monetary value to a massive global monetary network worth $1 trillion. There were many events that forged the path for Bitcoin's current and future success. Here's a list of my top 5. Number 5. The Great Chinese Mining Exodus. In June 2021, the Chinese government officially banned Bitcoin mining throughout the country. With over half of Bitcoin's entire hash rate coming from China, this announcement had a major impact on the market. The price remained lingering in the 30,000s, a far cry from the highs above $60,000 experienced just 2 months prior, and Bitcoin's hash rate fell over 50% from its highs, prompting many people to call for an end to the bull market. However, thanks to the brilliance of its design, Bitcoin not only shrugged off this attack, but emerged stronger because of it. Miners began to relocate to friendlier jurisdictions, many to North America, and the hash rate and price quickly began to recover, both jumping over 50% in just 2 months. One of the most popular anti-Bitcoin talking points for years, that mining was too concentrated in China, was eliminated almost overnight. The Chinese mining ban will be remembered decades from now as an event that proved Bitcoin's anti-fragility. Number 4. MicroStrategy adopts a corporate Bitcoin standard. In August 2020, Michael Saylor made one of the boldest moves by a public company CEO in recent memory, purchasing $250 million worth of Bitcoin to hold on his company's balance sheet. By adopting Bitcoin as a treasury reserve asset, Saylor instantly de-risked Bitcoin to the rest of the corporate world. Bitcoin could no longer be dismissed as a fringe asset only purchased by speculators and unsophisticated investors. Saylor's bet on Bitcoin coincided with the beginning of a run that took Bitcoin from $10,000 to $40,000 in less than 5 months. Many companies quickly followed MicroStrategy's lead, including Square and Tesla. Shortly after his venture into Bitcoin, Saylor open-sourced his playbook, hosting executives from thousands of companies at his virtual Bitcoin for Corporations event, where he and many other speakers discussed why, and perhaps more importantly how, the corporate Bitcoin investment was made. The event no doubt planted the seeds for many billions of corporate treasury dollars to flow into Bitcoin in the coming years. Number 3. The 2017 Fork Wars. In 2015, a debate began to emerge surrounding the scalability of Bitcoin. There were 2 major ideologies that dominated the debate. There were those who wanted to scale Bitcoin by increasing the block size, the big blockers, and those who were in favor of a layered solution to scaling whereby the block size would remain small, the small blockers. The big blockers wanted to sacrifice decentralization for a temporary reduction in transaction fees, while the small blockers remained steadfast in their belief that decentralization was a foundational component to Bitcoin. By keeping the blockchain small, anyone in the world can afford to run a copy and ensure the rules are being followed. In August 2017, the disgruntled group of big blockers attempted to take control of Bitcoin and hard fork its code, despite the majority of Bitcoin users disagreeing with this philosophy. Instead of changing Bitcoin, the attack simply resulted in the creation of a new altcoin called Bitcoin Cash. The 2017 Fork War was a seminal moment for Bitcoin. Had the big blockers succeeded in their attempt to take control of the network, Bitcoin as we know it may not exist today. Setting a precedent of putting a small group of people in charge of the block size would have potentially jeopardized other fundamentals, such as the pre-programmed inflation rate, or even the 21 million hard cap altogether. Bitcoin's decentralization and resistance to major protocol changes are what sets it apart from other cryptocurrencies, such as Ethereum, which can be changed much more easily. The aftermath of the hard fork also laid to rest another concern about Bitcoin, that forks would dilute its supply and eliminate its guarantee of scarcity. Since Bitcoin Cash, there have been dozens of new coins created via hard fork, and all have quickly faded into irrelevance. Number 2. El Salvador's adoption of Bitcoin as legal tender. In June 2021, El Salvador made history as President Nayib Bukele introduced a law later passed by the Legislative Assembly, granting Bitcoin legal tender status throughout the country. Bukele wasted no time preparing for the law to go into effect, setting the launch date just 3 months later for September 7, 2021. It is remarkable to think that nation-state level adoption has already been achieved just 12 years into Bitcoin's existence. For the first several years, no one had even heard of Bitcoin. For the next several years, Bitcoin was bombarded with lazy narratives such as blockchain not Bitcoin, as well as thousands of altcoins attempting to knock it off its pedestal. As expected, the adoption of Bitcoin drew criticism from the IMF as well as other mainstream economists. However, the results will speak for themselves. Citizens will benefit from seamless and free remittance payments from outside the country, as well as instant settlement for in-person transactions. Salvadorans that choose to hold Bitcoin as savings will be rewarded by Bitcoin's likely rise in price in the coming years. The Salvadoran economy is also poised to receive a boost from many Bitcoiners who will visit or even move to the Bitcoin-friendly country. El Salvador will be the first major test for the Lightning Network, the scaling solution built on top of the Bitcoin blockchain, which allows for millions of transactions per second at the speed of light at virtually no cost. If all goes well in El Salvador, we can expect more merchants from around the world to begin accepting Bitcoin as payment through the Lightning Network. El Salvador is the first nation to adopt Bitcoin, but will not be the last. When countries realize how much their citizens have to gain by adopting Bitcoin, there will be a flood of nations following El Salvador's lead. Number 1. The disappearance of Satoshi Nakamoto. In early December 2010, a concerted effort was made to shut down WikiLeaks, an international organization known for leaking censored and classified documents. PayPal, MasterCard, and Visa began restricting payments sent to WikiLeaks, and Bank of America cut off their banking services. Some people recognize this moment as an opportunity for Bitcoin to put its decentralization and censorship resistance into practice. But not everyone agreed, including Satoshi himself. On December 5, 2010, in response to a Bitcoin Talk post encouraging WikiLeaks to use Bitcoin, Satoshi wrote, "No, don't bring it on. The project needs to grow gradually so the software can be strengthened along the way. I make this appeal to WikiLeaks not to try to use Bitcoin. Bitcoin is a small beta community in its infancy. You would not stand to gain more than pocket change, and the heat you would bring would likely destroy us at this stage." Then 5 days later, on December 10th, website PC World published an article promoting Bitcoin as a potential solution to the financial blacklisting of WikiLeaks. This marked the largest publication to date to feature a story about Bitcoin, and the publicity concerned Satoshi. It would have been nice to get this attention in any other context. WikiLeaks has kicked the hornet's nest, and the swarm is headed towards us. The next day, December 12, 2010, would mark the final public correspondence of Satoshi. Many theories and rumors surrounded his disappearance. Based on his final posts, it is likely that the publicity generated by WikiLeaks played a role in his decision to leave Bitcoin. Regardless, Satoshi's disappearance is one of the most important aspects of Bitcoin, and yet another feature that sets it apart from all other cryptocurrencies. With no leader to call the shots or influence public perception, Bitcoin is the only cryptocurrency truly capable of achieving the level of trustlessness required to operate as a global money. While well-known founders such as Vitalik Buterin, Charles Hoskinson, and Charlie Lee are able to dictate the debate and guide the direction of their respective coins, there's no one even remotely capable of doing so with Bitcoin. By nurturing Bitcoin in its infancy and then releasing it into the wild, Satoshi allowed Bitcoin to grow into the trustless, decentralized, immutable, unstoppable network that it is today. Thanks for watching. See you in the next video.